Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Carlos Domingo, co-founder and CEO of Securitize, to discuss digitizing private markets. Carlos, it's great to meet with you. Welcome to Trade Talks.
Hi, Jill. Thanks for having me here today.
You got it. And I know your primary objective is to better digitize private capital markets. Tell us a little bit about Securitize and how you're achieving that through security tokens.
So at Securitize, as you said, we believe that private capital markets are in need of a drastic digital transformation to make basically three things more efficient. One is capital formation, so make it more accessible for the everyday customer and investor. The second is everything has to do with asset servicing, clearing and settlement, etc. And the third one is to provide liquidity. We believe that blockchain platforms are particularly suitable for providing this digitization for private capital markets because they are a very good way to represent ownership and represent rules around ownership and transfer of ownership, etc.
And private markets are interesting. They're more than double the size of public markets, but more than 330 times less liquid. Tell us more about that.
So private capital markets, obviously some private companies are illiquid by design, right? They stay private because they want to be private and they don't want to have any sort of liquidity of trading of their securities. But given the size of private capital markets, we believe that, some companies will want to have some degree of liquidity, especially because these days it takes way longer to become liquid than it used to be in the past. As you've seen in recent IPOs like Airbnb or Palantir, those companies are 16, 15 years old by the time they go public, and all the growth and all the benefit to investors has happened on private capital markets, as opposed to, let's say, 20 years ago when PayPal or Amazon went public, they're like low single-digit billion-dollar companies. So we think that one of the reasons why they are illiquid is because, one, obviously the cost of going public in public markets, but the other one is how inefficient it is to trade private securities due to the complex regulatory situation, the fact that they're not digitized, as we discussed before, that settlement and clearing and settlement is very complicated, etc. So we believe by digitizing those processes and make them very, very efficient, we could increase the liquidity for private securities.
And Carlos, what's really interesting, as we're recording on Thursday, February 18th, you have executives from Robinhood, Reddit, Citadel testifying on the Hill, talking about market structure and democratizing access for investors. And many market structure experts, such as yourself, have been vocal about the need for decentralized clearing for public equities. Tell us more about that.
Yeah, so I was listening at the hearings before we started the recording. I think it's fascinating what has happened and has basically uncovered a problem that most people are not aware of, that the fact that, in the US, in public markets, you have a centralized clearinghouse that takes 2 days to basically clear and settle a trade, which means, between the time you actually put the trade and say you're going to buy $10, one share for $10, by the time it actually settles, the price in the market might be completely different. And given the high volatility that some stocks experimented, like GameStop, then the clearinghouse, to protect themselves from the difference in price between the time the trade happens and the time the trade settles, it requires the brokerage houses like Robinhood to have capital requirements to cover for that potential, difference in price. Obviously, if if trades settle instantly, the moment you order to buy $10 of one share for $10, it settles. Then this problem of capital requirements will not happen. And blockchain actually happens to be a very good platform to do that, because you can represent with the same underlying, let's say, native digital representation. You can have one thing representing cash and another one representing the stock that you want to purchase. And then blockchain technologies have a property called atomic swaps, which basically allows you to swap these two digital representations of assets instantly and in an atomic way. In other words, that they either both change hands or none of them changes hands. And that leads to instant settlement, and instant settlement doesn't have any counterparty risk, because that's it. The trade is finished, and the volatility is not impacting the price of the trade. So this will eliminate 100% capital requirements, which was the problem that Robinhood had. But obviously, it also requires regulatory changes, because centralized clearing for public securities is actually a requirement by the US government. So.
And to wrap up here, tell us about your growth plans for 2021 and where you're seeing the most opportunities.
Well, so we just purchased a broker-dealer in the US. We finalized the transaction in November last year. This broker-dealer has a particular license called an alternative trading system, an ATS license. This is a very scarce license. There's only 50 companies in the US that have one, and very few are allowed to operate with digital asset securities on the blockchain, like our license. and that we're going to launch a secondary market for private securities to start addressing the issue that we mentioned at the beginning about the lack of liquidity for private securities. We think this could be transformational because, it will be one of the first times that you can actually do, instant settlement without any need for a centralized clearinghouse, and for private securities, which are notoriously difficult to trade. So we think that if we execute well on this project, this could really transform private capital markets, and we're super excited about it.
All right, Carlos, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jen.